Hello everyone and welcome back to yet another episode of the Velocity channel. We're going to go ahead and hop into a subject that perhaps a lot of you were waiting on, and a lot of you are kind of anxious because you're seeing the markets and perhaps it's not going the way that you wanted it to, and perhaps your job is telling you or warning you of what's ahead. I just want to set your nerves at ease and let you know that it's not going to be as bad as you think if you allocate your finances the right way. Before I get into how to do that, I want you to like, share, and subscribe because everybody all around this world needs to know the Velocity Banking Method, because this is what can help you and assist you to stay clear of the bear markets, right? The crash, and also to assist you in your knowledge of investing in general, right? Whether it's real estate investing, whether it's paper assets, whether it's any asset, okay? This will help you become an asset manager, okay? This is what the wealthy do, folks. Please, please, please pay attention to what I'm going to say. Now, we know that the Fed is tossing around the idea, and there's going to be a CPI report, a consumer price index or inflation report, as of tomorrow. And it looks like they're going to be a little bullish. Now, anybody who has been in the markets for long, Wall Street, investment banking, whatever, they know that sometimes when the Fed gets bullish, a lot of people get nervous. Why? Because, man, you could get it wrong. Okay? You could get it wrong, right? It could go down instead of going up. And so what you need to do, and you need to write this down, right? You need to make sure that your downside is protected. Because when your downside is protected, your upside will take care of itself. Does that make sense? All right, perfect. So let's go ahead and pull you a little closer here, right? Want to make sure you're closer, you're seeing this, because we have a lot to go over today. We're not going to waste your time. We're going to hop right into it, all right? So remember, when you have a bank account, we're not going to use that one. When you have a bank account and you, let's say, have 5,000, we're not going to use that one either. Let's go ahead and you got 5,000 in it, all right? So what are you going to do with that? Are you going to leave it inside of the black hole account? A lot of times you guys are like, man, why is he calling it the black hole account? The checking and savings account, that's what I got taught growing up. That's where I put my money. Well, remember what's going on right now. As your money is sitting stagnant, it is losing money. Inflation is the invisible tax. And so this $5,000, as it's sitting in your checking account, it is losing purchasing power as we speak, bit by bit, okay? So what you're going to do with this is you have to move it. You have to move it out of the checking account or the black hole account into a deposit, right? Into a line of credit that is not, right? That is not going to be losing value like it is here. No way. Why is it not losing value? Because with your line of credit, it's attached to your name. It is attached to your name. It's getting reported. This isn't necessarily getting reported. Of course, if you signed up for the Ultra FICO, which I don't recommend in many cases, right? Then of course, it would get reported. But if you're not on that, it's not getting reported and you're losing value. So you're going to go ahead and place this inside of your line of credit. You say, well, CJ, I have a $10,000 line of credit and I have not spent any of that money yet. Well, why aren't you spending the money from your line of credit? Huh? Spend it, right? Invest it, right? Because this $5,000 needs some place to go that is not going to lose as much value as it would in a checking or a savings account that most likely does not get reported. That reported thing is very, very important. So if you have a home equity line of credit, if you've got any line of credit, personal line of credit, business line of credit, any line of credit, if you're new to credit cards, put this amount inside of your credit cards. Why do I say that? So that when you're using your credit cards, remember this is the credit card, right? And this is the checking account. When you're using your credit card, it's getting reported. And you want your name reported in a good light so that when the lenders look down and they say, man, who can we bless with another credit line increase? Your name can be in the barrel. And this 10K can hop to 15K. Perhaps it can hop to 20K and above. All right? Now look. This is what you want. Watch this. 20K from 10K. This is what you want in this economy. All right? So you have to make sure that your name, your reputation, your credit is getting built up in this economy. That's why I continually harp and I put out video after video on how important it is for you to get business credit. Why? Because the deductions and the whole tax code was actually not made for the common man. It was made for the real estate investor. It was made for the business owner. It was made for the systems owner, not common folk, right, that are just going to work for a 9 to 5 or a 9 to 9. It wasn't made for you. The whole system wasn't made for you. This is a debt economy. And I know a lot of you are like, man, he's talking about getting more into debt. No. I'm talking about getting what used to be debt. Come on now. What used to be debt, now you're using it as an asset to pay off debt. We're talking about eliminating your debt through credit. Now, I know that doesn't make a lot of sense for a lot of people, but they don't understand we live in a debt-backed system where debt is an asset. Okay? So you have to learn, right, the foundations of the system in order for it to make complete sense for you. Now, a lot of you don't know, right, that the Federal Reserve is neither federal nor is it reserve. It doesn't matter. You implemented the system and now you have multiple houses. You've implemented the system and now you have multiple businesses. You've implemented the system and now you have real estate investing experience because you weren't afraid to take that business line of credit because you know how to pay it now. This is why some of you will continue to be broke because you're segregating your income. Watch this. Segregation was not good in the 50s and it's not good now. All right? You're segregating your income. All right? Look at this. Look where your income is going. It's going to your savings account, black hole account. It's going to your mortgage. All right? It's going to your groceries. Right? All the while the wealthy are like, man, I don't know why they're doing that. We're just going to put all of our money, right? 600 and 600. We're just going to go ahead and place all of our income inside of our line of credit, and we're going to spend our line of credit as if it's our checking account. We're going to use our line of credit as an asset so that the asset buys the car. The asset buys the groceries. The asset buys another building. The asset purchases. Your credit card is not a debt. As we've shown you in hundreds of videos, it is an asset. And when you're using it as an asset, it'll cause you to be set. All right, folks. Thank you so much for watching. I definitely hope this helps. Please contact me. I actually get in touch with people. Huh? Isn't that right? Mr. Hanson, right? Mr. Barney. Absolutely. Man, they're doing great things. Miguel's over there. Just absolutely building his business. Very proud of you. We're very, very proud of you, Anais. I haven't forgotten about you. Absolutely, everyone. Michael. Right? So listen, folks, please, please, please share this ahead of Friday so that everybody can know, hey, this is how we get out of the trap that they have put us in. Right? We got to play by the rules if we want to win. Okay? God bless. You guys have a great night.